Hello Wolfpack. During a bull market, buying altcoins and trading altcoins is extremely easy. You can basically buy anything during an altcoin season, and 9 times out of 10, it's going to go up. And not only is it going to go up, it's going to go up quite a lot if you've got persistence and if you chose the right coin. Now, obviously, it's a bit more complicated than that. However, what we can mutually agree on, and what everyone can agree on, including myself as a full-time trader, is that trading in a bear market is much more difficult than trading in a bull market, but there are ways to do it successfully, and they're not extremely difficult ways. It's not like trading in a bear market is impossible. If the market is trending downwards, obviously you need to have lower expectations, and you need to try catch swings off support, and that's what we're going to be talking about in this video. Now, as I said, in a bull market, all right, this is the Bitcoin dominance chart. You see the Bitcoin dominance drop massively. Now, we've had 2 real altcoin seasons in the entire history of cryptocurrency, right? We had it in December 2017, and then we had it throughout January to May 2021. And I know a lot of people would say, and honestly, you could probably narrow that down to May 2021, but a lot of people would say, and the way people talk about altcoin season is they talk about it like it happens every single day, right? You go through YouTube, you go through Twitter, you're hearing about altcoin season, 5, 6, 7 times a day. Every single post is about an altcoin season that's about to happen. But when we look at the data, in the last 5 years, we've had 2 altcoin seasons. In total, they've lasted together about 3 months, right? So altcoin seasons are not common things. 3 months out of the last 5 years, that's not a common thing. The only reason people talk about it a lot is to kind of bait engagement and bait views and bait followers, because people love hearing about it, because obviously people want to hear that they're going to make a bunch of money. But I'm here telling you the objective truths of the situation. And I've been saying it for a while now. We're in a bear market. We have to lower our expectations, and we have to be logical, right? Being illogical and and praying for something that's happened very, very rarely in the past, although it could technically happen, there's very little indication that it will. And so praying for it is illogical. We need to adjust to the current market environment. What I can tell you about trading, what I can tell you about investing, is the number one key to be a successful investor is learning how to be adaptable. Adaptability is the number one key to being a successful investor. The market is not a bull market anymore, and so we can't be praying for 50% trades, 200% trades, 10x trades. We have to lower those expectations down to 5% to 15% trades, right? Depending on the market environment, depending on what Bitcoin's doing, 5% to 15% trades. Now, what we've seen on Bitcoin is a macro kind of a structure here. We had a long-term bear flag structure. Now, obviously, this is a bearish structure, but ways you can play this are numerous, right? Every time we come down to test that structural support, you can buy altcoins and you can swing them until we reach the next logical step, which is a swing to the top of the structural support, right? That is obviously one way to play it. That is called swing trading, right? You're playing on the macro swings in the market. Some people would say that, the best way to trade is shorter term swing trading, like I just pointed out. Some people would say the second best way to trade, or the best way to trade in their opinion, is longer term swing trading, like catching macro swings that go on for long periods of time, right? That's a long, that's a short, that's a long, that's a short. All of this stuff is very well and good in hindsight, and that is my problem with it, right? People go on YouTube and they go on Twitter and they all willy-nilly go and say, this is an easy long position, and you just trade it like that, and that's an easy short position, then you just trade it like that. And it's like, that's not really how it works, right? On paper, after the fact, you can look back and you can point out many, many things in the charts that would have made it easier to predict at the time that was going to happen. However, at the time, obviously, it's more difficult to predict. And so the way I like to play my trades in a bear market is very different to the way I like to play my trades in a bull market. In a bull market, I'm all about swing trading. I'm all about catching the maximum potential of altcoins over, week to month periods of times, right? Because I know that they need time to progress. And if they do get that progression, if they do get that pop off, if they do break that descending triangle formation, that symmetrical triangle formation, that descending wedge formation, they're going to be jumping up 50 to 100% in about a week. No problems at all most of the time, okay? In a bear market, it's not the same. In a bear market, the general, way or direction in the market is downwards. And so inherently, if you're in a bear market, you're already betting against the trend on a longer term scale. As you guys would know, Bitcoin controls altcoins. Whatever Bitcoin does, altcoins do. So if Bitcoin's trending upwards, altcoins are generally trending upwards. If Bitcoin's trending downwards, altcoins are generally trending downwards. That's why in a bull market, you have very little things to worry about. All you need to worry about is your altcoin chart, right? In a bear market, you need to worry about what's happening next with Bitcoin. Since the trend is downwards, you don't know when that next big drop is going to be. And there's been many of them, right? So if you're all wrapped up in an altcoin and you're in a week to month long trade, you're exposing yourself to risk for a week to a month. Whereas if you're in a trade that lasts a few days, you're only exposing yourself to a risk that lasts for a few days, right? You can see how minimizing the time frame of your trades minimizes the risks of your trades. That is number one. Let's actually write that down there. So minimize, I don't know how to spell that word, time frame, right? I'm not a English grammar expert. I'm a trader. So we have minimize time frame. And so the second point I wanted to bring up was, I guess you could say lower expectations for profits. So we said this before, lower your profit expectations. So essentially, if you're looking for in a bull market, trades that go for, say, I don't know, 50 or 100% per trade, as per, big breakouts and you're catching the macro swings, you need to drop that. Because if you're minimizing time frame, inherently you're minimizing your profit potential because you're going to have a lower time for that to play out. You're also going to, if you're minimizing time frames, you're looking at lower time frame charts, which means you're looking at structures on lower time frame charts, which means you're looking at smaller structures, which means you're going to have lower expectations for the breakouts. You're also trying to preserve your risk by minimizing your expectations, right? Obviously, a lower risk, a lower reward equals a lower risk, and obviously you need to minimize your risk in a bear market because the whole market's trading downwards. So those are 2 points. Now, those are two very important points. I would call those the base points. Now we're getting into kind of a strategy of how to trade in a bear market. And what we want to be trading in a bear market, I don't really have a name for it, I'm going to make it up off the top of my head, is basically catching the bounces on the way to the deathbed, I guess. So this is what it's all about. Now, for those of you who don't know, altcoins, and people hate hearing this, but I have to say it, altcoins generally die out in a bear market. I say generally, right? In 2018, if you took a snapshot of the CoinMarketCap top 100 chart from 2018, right? Out of those 100 coins, only around 15 of them, right? Just over, I think it's 1 to 2 dozens. I know it's below 20. Around 15 of those coins, just for argument's sake, reach their all-time highs ever again, right? These are the most popular coins, the best coins in the market in 2018. Only 15 of them, so 85% of those coins never reached their all-time high again. And I guarantee you, out of those 85 that didn't reach their all-time high, the vast majority are probably unheard of. And if for the new market participants who are coming to the market in 2021, they probably never heard of these coins in their entire life. They probably don't even know what the names of these coins are, right? They don't exist. They've fallen off the face of the earth. They died in the bear market. They were unable to sustain through the bear market. And some people would say that, oh, that's because, 2018 was full of ICOs. There was an ICO boom, heaps of new projects everywhere. Everyone got hyped up for nothing. It was kind of like a dot-com crash. But I would say that that's just a reflection, maybe an exaggerated one, but it is a good reflection of how altcoins work. Altcoins rely on being new for their marketing. The main marketing point of an altcoin is you missed Bitcoin, you missed Ethereum, don't miss X coin. Don't miss this coin, right? That's the main marketing point. And if the coin's 4 years old and it came out last bull market and it's done nothing since then, you can't use that marketing point anymore. It's not relevant. And so the vast majority of your positive marketing is immediately out the door. Altcoins are largely dependent on being brand new for their performance to be driven, right? Obviously, there's exceptions, right? Litecoin, Monero, right? All these coins, they're exceptions, but there's not many of them. There really is not, right? I could probably list like 10. That's it. Okay, the vast majority of coins that performed well in the 2021 bull market are coins that came out in the 2018 to 2020 bear market. Okay, they were new coins. They hadn't seen a bull market before, and so they could use that marketing point. So now that altcoins are kind of on the way to their deathbeds, per se, well, most of them, obviously some of them will survive, I'm not denying that, but most of them are on the way to their deathbeds, we have to catch bounces on the way down. Altcoins are like tennis balls dropping to the floor. They do not drop flat. They don't do this. They don't go from their all-time high. They don't just go like that, and then they flatline and don't come back ever again. They do this, right? All-time high, they'll come down, they'll bounce, and then they'll flatten out, and then they'll go dead, right? That is what it looks like. You need to catch each one of these bounces. Again, this is all looking good on paper, but I'm going to show you how to do it in practice in just a second after we look at BitGet, the exchange. In a time when government regulation constantly threatens crypto investors, being able to access an exchange without KYC being mandatory is absolutely exceptional. This is great for me personally as an Australian because a lot of other exchanges out there like Binance don't allow me to access options due to Australian regulation. BitGet additionally is also host to trading fees even lower than the vast majority of the major exchanges at just 0.2% per trade. Sign up to BitGet using my referral link in the pinned comment below or the description box and you will receive up to $153 USD deposited into your account as a reward. So I've hidden the coin names of these coins because they are exclusive to the WOC exclusive Telegram group. If you aren't aware, I have a Telegram group in which I on a daily basis, trade altcoins. We're very profitable there, 400% profit last month, plus 400%. And so out of 15 trades, we're doing very well so far, and that is going to be renewing in 4 days. So if you're interested in that, go ahead and check that out. 4 days until it opens up again, and you can join up or just check out the details if you want to. But I'm hiding the coin names for that reason. This is a trade that has been posted within that group and talked about extensively within that group. And so we're going to talk about it very simplistically today, just to get an idea of what the structure is. Okay, so this is how I identify structure on an altcoin in a bear market. I have 3 examples. I have this coin, I have this coin, and I have this coin, right? They all have different aspects to them that are very important. Now, first and foremost, let's delete everything. Let's start fresh, right? So you're looking at a chart for the first time. What you want to do, first and foremost, in a bear market, go on CoinMarketCap, go to the top 200 coins, scan through each and every one of those coins, and look for these things. Macro support, horizontal. Right? The first thing you want to look at is macro support horizontal. If you're going to catch these bounces like a tennis ball on the way to the fall, like I described before, right, you need to identify the bouncing zones, right? What we can see here is that there is a very clear bouncing zone that kind of lasts throughout the entirety of the last almost year on this coin that is sitting at around 63 cents. Okay? How do we know that? We saw resistance from it here, and when we got above it, you know, we came down and now we're bouncing off it on 3 separate occasions. Okay, it is a macro support zone and it is horizontal and it is most likely going to be holding, until the trend ends, and it doesn't, right? Eventually it's going to break to the downside, but as of right now, we have to assume it's going to be holding for the sake of trade. Now, secondly, once you've identified macro support, you want to be identifying any sort of market pattern, right, that is playing out. So what we can see is that essentially we do have a market pattern playing out here in form of this descending line, right? We have 3 separate touches of a descending resistance line, okay? So what we are seeing now that we have a macro support and we have a market structure and we have a market pattern playing out, is we see a little trading signal forming, right? What is this trading signal? Essentially, this is a descending triangle formation, right? I know what you're thinking. Descending triangle formations are typically bearish formations, but the thing is, we don't have to trade this coin, right? If it breaks to the downside as expected by a descending triangle formation, great. We'll delete it. We'll move on to the next one. However, if by some stroke of the imagination, by some stroke of luck, it breaks to the upside, awesome. We've got a trading signal on our hands, right? It doesn't matter what the structure is. It doesn't matter what the market pattern is. No market pattern breaks the downside of the upside 100% of the time. So as long as you keep an eye on it and wait for that breakout and then enter once the breakout happens, if it happens to your favor, it's fine. It doesn't matter what the market structure is. So now that we have a macro line, and now that we have a macro support line, what we can start to do is try to identify a target, right? I'm not looking at indicators. I look at indicators a lot in the group, but I'm not going to look at them now because they kind of complicate things too much for the sake of this video. But now we need to identify where a take profit zone would be if this trade were to break out. So again, if this was to break to the upside, right, while holding that macro support, if we were to swing up and break this line of the upside, where would we be taking profits? Keep in mind, Bitcoin is in a downwards trend. Any swing to the upside is going to be very, very weak, right? It's not going to be to a full potential, right? We need to get in and get out as fast as possible. We can't be in this trade for 4 weeks waiting for it to happen. Where would be a logical place to take profit? We need to look for the nearest macro resistance zone. And what we can identify is the nearest macro resistance zone is basically sitting right here at 85 cents. Why is that? Well, looking at the chart here, you can see 85 cents was tested here on February 3rd. 85 cents held for support here throughout the mid part of February. We came up and tested it during March 2022 here. And then also on 2 separate occasions in April, we tested it and bounced off of it. And then we also rejected from it after a fake out on May the 5th. 85 cents is clearly, and this will take some time to get used to identifying resistance zones, but 85 cents is clearly the resistance zone that is of our preference here. It is the resistance zone that this coin is most likely to bounce up to and reject off if it breaks out, right? So again, this is what we're looking for in this trade scenario. Macro support bounce, breakout to the upside, enter upon a break, swing up to 85 cents and take profits. If the breakout fails, take profits at 63 cents and you'd only enter after the breakout. That's another important thing about trading during a bear market. Only enter after a confirmed breakout, even if it diminishes the amount of profits you can make during a trade. Okay? Because we don't have the odds simply are not in our favor in a bear market to enter preemptively. We need to wait for it to be 100% confirmed that that coin is breaking out. We simply don't have the odds in our favor to enter right now and pray for the best, right? For all we know, it's a bear market. It's probably going to go down macro, and so we'll probably just drop below. But on the occurrence that we do break above, we've got a nice little trade there, a nice little 10 to 15% trade, right? And that's what I like about bear market trading. You don't need to rush it. You can wait until it's confirmed. You can get in and get out. Another coin here is another example, and then we're going to look at total cryptocurrency market cap chart. So another example, okay? On this coin, we had no real horizontal macro support. Okay, when identifying patterns of this coin, we had no real horizontal macro support. There was nothing really, too compelling to look at in terms of horizontal macro support. We'd lost everything. It was all gone. But even when there isn't horizontal macro support, you can still look for diagonal macro support. And what we formed is a descending wedge formation, right? We had 3, in terms of candle closes, 3 tests of the bottom of this descending wedge formation, and we had a resistance line here. And what we said in the group chat, right? For example, if we go back in time here, let's just replay it. We said, okay, what we have is a downtrending resistance line, and now we have 2 touches of the bottom of this support line. So now we have, for sure, a descending wedge formation. We didn't count these wicks because in the shorter term, they happen very, very quickly, only 15 minutes on each wick, basically. And so we said, okay, now that we have a confirmed descending wedge formation, while we're dropping below resistance, we can kind of identify the fact that this resistance zone, these resistance zones being lost, or support zones being lost, wasn't actually a legitimate market participant price action. It was basically accidental. It happened due to Bitcoin dropping. It wasn't what the market wanted. And so what we could say is that when we come down to the bottom of this descending wedge, we can expect, due to the fact that this coin has already oversold itself, we can expect a swing to the upside off the base here, up to this red dashed line, right? So we can at least expect, we're not hoping for a breakout, we can at least expect it to bounce and retest the top, right? And so what has the coin gone and done? Let's remove it and bring it back to the present date, okay? We've actually bounced as expected, and we're coming up right now to retest the top of that resistance zone, at the top of the wedge formation, right? So there's another way you can do it. So you can identify horizontal support, or you can identify diagonal support in terms of market pattern in a critically oversold coin like this coin, right? Do I expect this coin to break upwards? No, not necessarily. It's a bear market. Why would it break upwards? It's not going to go ahead and create a new bull run and go to all-time highs. It's very unlikely. It's not going to happen, right? But it probably will come up, reject off this, and then break down, right? It's all about catching those little micro swings, I should say, before the deathbed comes, as we identified before. This is the third coin we've got here, and we're going to bring in indicators into it this time because this one has very clear indicators that are very simple to follow, okay? So what we have, again, I'm not going to tell you the coin name. What we have is a macro support box on this coin between 16 cents and between 18 cents, right? So very clear horizontal macro support zone. You're not going to get more clear than that, to be honest with you. I mean, it's literally just held throughout the entirety of the last almost year, right? That is such a clear horizontal support zone. Every time we come down to it, we bounce, right? We bounce, right? It's pretty much the only thing holding the price up at this point. And so seeing as it's held the price up for so long, we can take a gander and we can take our bets using indicators to determine that, hey, maybe it's going to hold one more time, right? So it's a good little odds game to play. So what are we looking for of this coin? Well, right now would be a buying signal, right? As close to 16 cents as possible, but we've entered that green support box. We've entered where it's tested multiple times. Right now would be a buy signal. You can see that out of the last 1, 2, 3, 4, 5, 6 separate times we've tested the support box, we have broken upwards, right? So again, it's like, well, if we've done it 6 times, the chances are it's probably more likely than not that we're going to do it again. Now, it won't go on forever. Obviously, it's going to lose it eventually. It's a bear market, of course, but we're taking the odds here. We're taking a little bet. We're taking a little wager on whether it's going to happen again and using indicators to support that evidence. We're not just doing it blindly, right? So what are we saying? We're saying, okay, well, we think it's going to hold again. We think we're going to see another 10% bounce, okay? We've got a bullish divergence in the RSI. We've got a MACD primed to happen if we see that bounce like we did on last occurrences. And the POC is sitting up here at 20 cents. All of this is pointing to the fact we're on macro support. We will likely see a swing up to 20 cents before this coin drops to the floor, right? So again, it's all about catching those macro bounces, right? Moving on to something like the total cryptocurrency market cap, you can use this to determine whether a coin is going to bounce or not, right? You can identify major support zones on the macro, on the total cryptocurrency market cap, for example, here at 1.5 trillion. For example, that diagonal support line, right? Each time this bounced off support, altcoins did as well, okay? Each time this reaches a horizontal support zone, right? And it bounces, altcoins did as well, right? Same thing back in July 2020, right? 2021, I should say. It bounced here, altcoins did as well. It bounced here again, altcoins went on a bull market, right? So You can do the same thing on Bitcoin, right? You can identify major support zones on Bitcoin. When Bitcoin hits those support zones, then you can think about trading altcoins, because obviously altcoins have a lower market cap than Bitcoin. When they bounce higher than Bitcoin. So every major support zone on every major chart that determines the macro situation, like Bitcoin, Ethereum, and the total cryptocurrency market cap, when they reach their support zones, that's when you want to be looking for altcoins to trade. Right? You don't want to be looking for altcoins to trade, no matter how good the chart looks, when Bitcoin's up here testing resistance, because then it's very likely to break down, right? And then if that breaks down, there goes your altcoin trades, right? So the criteria for altcoin trading, and I'll just add that to the list right now, actually. Trade when BTC or total cryptocurrency market cap are on support, right? So now we've got 5 major points to sum up the video, right? We've got minimize your time frame, right, compared to a bull market. So instead of looking at I guess you could say, instead of looking at trading for swing trades that last a week to a month or more, that's not viable in a bear market. Everything's going down. You need to get in and out as soon as possible as to not miss the next drop and get caught in it, right? So minimize your time frames, minimize your profit expectations. Again, it's not realistic to expect 50 to 100% profits in a bear market. You need to lower it down to 5 to 10%, right? Then the next point is, and this is going into kind of examples, catching the bounces on the way to the deathbed. That is a technique. Instead of looking for when's the big reversal going to happen that's going to send it to the moon, look for when's the next 10% trade coming. When's that next little bounce before it goes to death, going to come. And then the last point is trade when Bitcoin or the total cryptocurrency market cap are on support to kind of buffer your odds of being a successful trade. Right, so that's the main points there. Now, before I end the video, I want to give a quick shout out to my course, right? So myself and Megawell Crypto, I should say, have created Become a Trader, a 10-unit course. If you want to see basically more similar content like this, much more similar content like this on how to trade, how to learn how to trade effectively in the cryptocurrency market, you can come and check out this course on the website, the Crypto Academy courses. thecryptoacademy.courses. So essentially we'll teach you everything throughout a 40-hour 10-unit course, everything from market patterns, everything from candlestick formations, mindsets, technical indicators, the basics of technical analysis. It's just this video, but on steroids with much more information that will take you from someone who doesn't even know what Bitcoin is to someone who's a fully competent trader who's able to be consistently profitable in the cryptocurrency market. Email us here at cryptoacademycourses@gmail.com. Right, and we inquire about the course information, and we'll send you a document with all the information you need and the pricing and how to make a payment, etc. If you pre-order right now, I've got pre-orders available. It comes out on May 16th, but pre-ordering before May 16th will lock in a lower price, and when that release date comes, we will send you the course. So you've got about 9 days left to pre-order at a lower price. When the course actually releases, you'll still be able to kind of buy it, but it will be at a higher price. So right now is definitely the time to get in. If you want to learn how to trade, a bear market is the best time to do it, right? Everything is stagnant, everything's going down generally, and this is the perfect time to kind of get your knowledge, get all your information intact, so when the next bull market does come, you can be insanely profitable, right? This is the time to learn how to trade, okay? So take advantage of this right now. 9 days of pre-orders left, get in the lower price, and I'm excited to see some emails from you guys. Thanks for watching, hope you enjoyed the video, and I'll catch you in the next one. Cheers.